I want to share a few things that I need you to put into consideration, which is what is called PE, that is price to earning ratio. For those who understand investing or who want to understand or learn about investing, you must always look out for the price to earning ratio of any particular stock you want to buy, because the PE indicates if a stock is expensive or it is very cheap for you to buy. Because every stock, the price to earning ratio determines the cost for each of the stock away from the price of the stock. And let me give you an example. I've mentioned SanDisk for a couple of times now, and I've listed it and I told everybody to prepare. You're going to get SanDisk into your radar. And then let me go ahead and check SanDisk. Why I think that SanDisk, even though the price is above $700, it is still very cheap compared to the industry. Industry has to do with like NVIDIA, AMD, Micron Technologies. All these are within the AI data center. They need the structures to be able to say that is the storage aspect of the data centers. And so let me look for SanDisk. Yes, I'm looking for SanDisk. SanDisk. Okay, good. This is SanDisk. Right now, it is already trading minus $44.69. The market has not opened at the time of this recording. You can see, because first is that the industry is not stable. In fact, generally, the financial market is not stable right now. So a lot is already going on. And that gives a lot of opportunities for investors, to accumulate valuable stocks. It's important to accumulate valuable stock. You can see this stock before closing yesterday, it was already trading $753.69. And you can see it has dropped significantly to $707. That is an opportunity. Of course, when the market open, we will know. Now, over here is showing minus. It's not showing the 12 trailing month, on the PE ratio. So I'm going to go ahead and set, because why it's not showing any number, because this quarter it has not released its forward PE. And so, but then when you look at this is the trailing PE, which has to cover a 12-month trailing PE. However, within the quarter, it's already trading $19.19 on the forward trading price to earnings ratio. I can see what it has done in the previous years. You can see what it has done in the previous year. 2025 accumulatively did $14.84 after 1 year. And now you can see what is doing right now based on the quarter, and currently trading at approximately $19.20, on per share. So this is SanDisk, and so you can see when you want to value a particular stock to know if it's over expensive or it is cheap, you check the price to earning ratio. Price to earning ratio is how they value one particular share on the earning ratio of that stock. Because when you remove the depreciation, you remove the tax, you remove the amortization and every other thing, what will be the resultant revenue, the gross revenue? Out of it, you'll be able to get the price to earning ratio. That is one. So I'm going to compare it with its fellow industry stocks, and one of those ones is I still have Western Digital, also Seagate. These are stock within the industry, but let me check Western. Let me check Western Digital. Western Digital currently is trading at $28 $0.82. You can see that the price to earning ratio, meaning that even with the price of this stock at $295, is still far expensive compared to SanDisk, which the share price is $707. Yet the price to earning ratio is still very cheap, meaning that SanDisk still have a very amazing space to be able to grow above $1,000. And let me go and check what is expected, what the projection for SanDisk. So I'm going to be using MarketBeat. I shared with you MarketBeat, how you can use MarketBeat to, I'm going to say SanDisk. Okay, see, this is SanDisk, SNDK. So okay, good. Now this is SanDisk, and so I'm going to check the forecast, the analyst forecast. And so on the analyst forecast, it's already showing me to moderately buy this particular stock, and then of course is now here is the price. Now you can see on the current trend is trading above $700, and on the high it is $1,000. So that is how it is projected. And so definitely this stock is showing us from the current forecast that you can strongly buy the stock because it still have a very high potential. On the buy rate, 15 analysts have already given that, and only 6 analysts is saying hold on, don't buy yet. And then 1 analyst is saying you can sell if you have bought this stock when it was like $70 or when it was $100, because 1 year ago, I think that was March 2025, this stock was trading around $94, $98. You can see in 1 year it has done approximately over 1,000%. That is that. And so I'm going to go back to where we try to analyze if this stock is cheap for you to buy. And it is not just only about the price, the share price, it's about the future, because we're talking about the forward PE, that is the forward price to earning ratio, as it's going to be. And so SanDisk is one of those stocks that is in fact benefiting from Nvidia, from AMD, because these are companies that are already building strongly on the data structures, the AI industry, building data centers. And you can't build data centers without considering the storage base for these data. Anywhere data is coming from, there must be a storage for it to go. And so SanDisk, Micron Technologies, all these are taking a large chunk from this industry. So let me check Nvidia and see what is the forward PE for Nvidia. You can see the forward PE, although this one is 1 year, this is 12 months trailing, trailing of Nvidia, which is $36.74. And so I need to also go ahead and then check the current forward PE, which is $22, and then the trailing 12-month PE is that of 36. Then I will check this of AMD, because these are industries that will make SanDisk and Micron to have a lot of upside, because I'm buying this particular. If I'm not buying SanDisk, I'm going to buy Micron Technologies. In fact, today I'm going to get any of this. So this is Micron, who in fact is highly expensive compared to what is going on. This is $76. $76, but I want to check what is current. Yes, the forward P is 29, but the 12 months trailing is already 76. So for you that want to buy, when you want to place your buy button at the moment, you can use the scanner. You can use the dollar cost averaging, to enter, because they may drop again. Just imagine what SanDisk actually did. Over $44 has just dropped, and so it may drop a bit and then pick up. So when they drop, you accumulate more because it creates more opportunity for you to add them into your stock watch list, and then you go ahead and buy. And again, this is what it is. Now, many of you are going to be experiencing some form of a dip. You may buy today, and then the next day you notice that it's showing you red. You don't need to worry, especially when you have taken your time to be able to analyze all this. So all these platforms I'm using, they are all paid platform because I'm a member, so I have a subscription, annual subscription. You can also do that. You can subscribe if you have the funds to do those things. However, you can use the free versions to reanalyze whatever I post here. You can reanalyze and then go ahead and buy. So I want to appreciate every one of you. This video, help this video to get at least 50 likes as you are watching. Please just do well to like it. You can also make a comment if there is a particular stock that you want me to analyze and give you my verdict. You can drop it on the comment section, and don't forget to subscribe to my YouTube channel. Help to share this video. You can also check on my channel. You see a lot of valuable videos that can help you to prepare yourself for the future. There's a lot that is coming. A lot is coming. And now the trend that is happening right now is at our own advantage, because there is a lot of stock that before now we could not buy them. Imagine Nvidia 2 years ago was trading around $2,400 and something dollars. The same thing with AVGO. Broadcom was 2,000 plus. You have a lot of them. Even Tesla, all these stocks, they were trading above our reach. But now, even after their split, you can see that they are recreating another opportunity for investors' confidence, and that is why we are here. Thank you, guys.